Welcome back to the Paper Podcast. Today, I want to break down an article in American Banker, Small Banks Fuel Rise and Borrowing from the Fed's Discount Window, and get your thoughts on whether or not community banks are in direct competition with the government. That it got me thinking that I feel it was a little bit off the mark of the reason why. And the headline of this is Small Banks Fuel the Rise in Borrowing from the Fed's Discount Window. And so it noticed that banks with assets, $3 billion or less, drove that increase. Such banks borrowed via discount window an average of 4 days in 2022 compared to the average of 2 days. And the Federal Reserve Bank of New York analysis, they quoted, let's see here, banks with less than $10 billion of assets saw declines of 46 to 55% in their cash-to-asset ratio for the first 9 months of 2022, according to them. So the notable decline in the total level of reserves in the banking system this year may have been an important factor in the discount window borrowing. Okay, so yeah, that, amazing insight came from the New York Fed researcher, they said. So, what I don't like about this article is it's the reason why you see smaller banks borrowing from the Fed, because it makes more sense at the moment. They're looking at it's rate driven. Also, what they're not saying is banks are in direct competition with the Treasury. The Treasury is offering 6-month yields at 5%. So, consumers, why would you leave your money in a savings account? Why would you leave your money in checking account where you can go get nearly 5% for 6 months with the Treasury? So not only, banks had a lot of deposits in due to COVID relief, consumers are having to spend their money, so it's not telling the true story. Consumers are spending their money. Inflation is up. That is driving. They have less money in their accounts. Therefore, too, so not only that, the Federal Reserve, they're completely untouched with reality as far as Main Street. They focus higher on Wall Street. But community banks are the driving force of small to medium businesses throughout the nation. So what they're doing now is, once again, they are in direct competition with banks. PPP relief, community banks came to the call. They did a majority of the loans. They were there. And once again, now, whatever this administration is doing, it kind of reminds me of what happened years ago. They're coming back in, and now they're in direct competition. I mean, we personally lost great quality commercial loans due to the government even financing directly 30-year fixed rates. So how are banks going to compete directly with the government? So what they're not telling you is they're the direct result of why the borrowings are happening. And, they're saying big banks big banks, they borrow from Fed discount window all the time. So, bankers, what do you think about, do you feel that, community banks, we are, again, in direct competition with the government for deposits? It's not a far stretch. I think the administration was trying to offer checking accounts to the Postal Service that it completely failed. So are they now raising rates and trying to make Americans more dependent on government services, now paying interest? Could be a possible argument. Are they trying to make not only consumers during COVID, we were dependent because we got money from the government to handle COVID relief. So now here's your money, and now we're paying you more interest than the banks. I think that kind of a good thing. They seem to be getting more involved in consumers over the last few years. What makes America are smaller banks. That is, you go to any other country, you're not going to be able to get funding for $100,000, $200,000 to fund your mechanic shop, to fund your fence company, to fund things that are going. And so, what they're doing here in this particular thing is it's like they're blasting small banks. It's complete other bullshit. They're the direct result of what they're doing is the reason why there's less money in coffers. But then again, banks had it on easy street as far as deposits during the COVID relief. So, they did get a little bit lazy. But, just because they're borrowed from the federal discount window does not make any difference of their viability at all. If it makes sense, if you're doing it temporarily, for a few days as opposed to locking in the future for longer rates, that makes way more sense for a bank to do that.